Welcome. Today let us understand the concept of accounting under fire insurance. So every business organization they do face risk. The risk may be related to the business process, the production process, or related to the market. It may be either controllable or uncontrollable factors that is causing risk to a business. So one among those risks is the loss of property and stock on account of calamities like floods, cyclones, fire accidents. So any of the losses that is caused by this would also be affecting the business process. In the present economic system, these losses need not be borne by the organization. So it is not necessary that the business itself should bear all of these losses. The burden of loss can be shifted to another person. There are some other person to whom the losses can be transferred. So the person who's agreeing to bear the risk of loss arising on account of loss of stock, property and profits due to the natural calamities or any other calamities and compensate such loss is called insurer. So insurer is the one who's agreeing to bear such losses that is caused by the calamities. The person who has suffered the loss and shifts it to the insurer is called insured. So the one who's bearing the loss instead of the other person is called as insurer, and who's suffering from loss and is ready to shift that loss to the other person is called as insured. The consideration for which the insurer will take up the burden of loss is called the premium. So it is not that the insurer will take up these losses for free. Obviously the insured is paying some premium upon which the insurer is taking up those losses. So now let us understand how do we calculate the amount of loss and that we can claim from the insurance agency or the company. So calculating the amount to be claimed from the insurer or the insurance company for the losses suffered on account of fire accident. In account of fire accident, so how can we claim the losses from the insurance company? The loss for which claim can be made can be for the loss of stock or loss of profit. There are two ways on which upon which the claim can be made. First one, loss of claim for loss of stock. So when we lose our stock, how do we claim under this fire insurance? So first of all, we have to predict the value that we have lost on the fire accident. Only with that value we can estimate the value that we can claim from the insurance. So how do we predict that? We'll understand that process. For calculating the amount to be claimed from the insurer for loss of stock in fire accident, the stock on the date of fire must be ascertained. So only the first step is to ascertain the value of stock on date of fire. Only after predicting the stock value on the date of fire, we can estimate the claim amount. If the book of accounts are properly maintained and updated, if the book of accounts are maintained properly, and if such books are not destroyed in fire accident, so if the book of accounts are maintained and if it is not destroyed by the fire accident, in such cases the stock on the date of fire can be ascertained from the book of accounts. Obviously the stock data would be available in the book of accounts. So if it is not destroyed by the fire, in such case the data available in the book of accounts could be used for predicting the amount of stock, value of stock. However, there are certain cases in which the book of accounts could be destroyed. However, if the book of accounts are not updated and if they are not available on the account of being destroyed in the fire accident or for any other reason, the stock on the date of fire can be ascertained by preparing memorandum trading account. So how do we prepare? We prepare memorandum trading account. So let us understand what is this memorandum trading account. So first thing is preparation of trading account. A trading account is prepared for the preceding year of fire for the purpose of ascertaining the amount of gross profit. So why do we prepare the trading account? Only when we know the rate of gross profit, we can predict the closing stock on the date of fire. So for that purpose, the gross profit of the previous year has to be ascertained. So this step is necessary when the gross profit ratio is not provided with us. So next is ascertainment of gross profit. So how do we ascertain the gross profit? With the following formula, where rate of gross profit is equal to gross profit by sales into 100. So this is the formula to ascertain the rate of gross profit. Third step, we prepare the memorandum trading account. This memorandum trading account would be prepared on the date of fire. So before the end of the financial year, we prepare this memorandum trading account. Memorandum trading account is nothing but trading account that is prepared to ascertain the stock on the date of fire. So on the date of fire, what is the value of stock? To ascertain that, we are preparing the memorandum trading account. It is not prepared as a part of double entry system. Hence, it is called as memorandum trading account. So this is the format by which we'll be preparing the memorandum trading account. In the debit side, we'll have the opening stock purchases till the date of fire. We have to enter those values and any of the expenses that is borne on purchasing the products. So those values would be added, and then the direct expenses should also be considered. And then on the credit side, it is the sales value and the closing stock. Yes, the closing stock on the date of fire should be mentioned, and the gross profit, which would be found out by the rate of gross profit. What is the formula? Rate of gross profit is equal to, we have certain percentage that would be calculated on the sales value. For preparing the memorandum trading account, the following information is required. So we'll require the opening stock, the value of purchase, the sales value, the direct expenses occurred, and the gross profit. Of the above, opening stock, purchases, direct expenses and sales would be available, but the gross profit must have to be ascertained by finding the gross profit ratio. For ascertaining that, the rate of gross profit on sales must be known. The rate of gross profit may be directly made known or might have to be calculated. For calculating that, the information could be provided in manner like the rate of gross profit of past few years could be given, or the gross profit and the sales figure of past few years could be given. Of that, we can find the gross profit rate and find the gross profit for the current year, or to that memorandum trading account we could find the rate of gross profit. Based on the information given, the normal rate of gross profit on sales must be calculated. Using that rate, the gross profit for the period up to fire accident must be calculated. So till the date of fire, we'll calculate the gross profit on the sales that is made till the date of fire. Incorporating that in the memorandum trading account, stock on date of fire accident must be calculated. Next is ascertainment of actual amount of loss. So though we have the value of closing stock, if suppose the closing sum of the closing stock is realized and those stocks are sold, again profit, if it is generating income, in such cases how do we determine the losses? From the stock on the date of fire, the actual amount of loss, it has to be ascertained. So what is the format by which we'll find the actual loss? So here we have the format where we consider the stock on the date of fire, that is the closing stock on the date of fire would be considered, less goods saved or salvaged goods or salvage or scrape. So any of the good that is saved out of the fire should be, value of that good should be deducted. So after deducting that, we'll have the value. With that, we add the expenses that is incurred for removing the fire. Say for expenses that is incurred for extinguishing the fire, all these expenses should be added and the remaining amount would be the actual amount of loss. Next, what is this salvage? The term salvage refers to realized or realizable value of stock saved from fire. The value of stock that is saved from fire and we get the money out of it. So that would be the salvage value. Next is ascertainment of claim amount. For the amount of insurance incurred, the claim must be extent of insurance on the value of goods. When the stock is properly insured or over amount of loss, when the stock is underinsured. In these cases, if the entire stock is destroyed, the policy amount would be the amount of claim. If it is properly insured, it would be the amount of claim. If only a portion of goods are destroyed, or if the actual loss is different from the stock on the date of fire, in such cases we'll have the average clause. So what is this average clause? This refers to, so whatsoever is included in the insurance agreement, will consider that only after that the claim amount would be decided. So average clause refers to the clause included in the insurance agreement for the purpose of discovering under insurance of stock or any other asset. When the insurance policy includes average clause, the claim attached admitted by the insurance company is calculated as follows. We have the formula for calculating the amount of claim under this average clause. So what is that formula? Amount of claim is equal to policy amount into actual loss of stock divided by stock on the date of fire. So with this we'll calculate the amount of claim. Thank you.